Welcome you with us here on Business Today. I'm Ava Bakaya. Here are the day's top stories. Festive season pushes up airfares to new highs. Travelers fork double the amounts they paid last year. Highest increase is on low-frequency non-metro routes. Big relief in story for electric vehicle and battery manufacturers. October deadline for new safety norms all set to be extended. Business Today TV talks to Sulaja Firodia Motwani on why the standards cannot be met. Second day of gains on Dalal Street. Sensex zooms nearly 600 points. Nifty nears the 17,900 levels. Pharma Pack leads the way. Mid-caps and banks also end higher. Two-day meet of the U.S. Fed Rates Committee begins today. Analysts expect a jumbo rate hike. Could this set the stage for next week's RBI meeting on interest rates? Top HR consultancy Team Lease paints a very optimistic picture of the Indian IT sector. Tells Business Today TV that IT jobs will double in 5 years. More interesting insights in the bulletin. Well, with COVID no more acting as a hindrance to travel, cash registers of airlines are ringing this festive season. If you're thinking of traveling this Diwali, get ready to pay a bomb. The prices of air tickets have shot up 40% in many sectors. One of the highest increases in flights is especially to smaller towns. To talk more about these trends, let me welcome on board Neeraj Singh Dev from Thomas Cook India, as well as Aditya Agarwal, CFO at ClearTrip. Neeraj, let me get a sense from you on what you're observing as a key trend this festive season when it comes to travel.
Yes, thank you very much. This festive period is very different than what happened in last 2 years in 2020 and 2021. And this time around in 2022, the mood is the best. The fear of COVID, the fear of travel, fear of getting infection is the lowest in last 2 years. Hence, considering the mood and the surge in demand and capacity coming full, in Indian skies, we have seen the demand considerably going high, and we expect this, this season to be a bumper season for the airlines as well as hotels. Keeping in mind that, and especially after the flight capping has been removed from in India, the fares have surged anywhere between 35 to 40% to key routes in India, and not only to the metros but tier 2 and tier 3 towns as well. As we expect, thousands of people to travel to their homes, especially and for holidays during Diwali period. And I also must add, the festive period in India is broadly, not all regions, all zones travel in the same period. For example, for Eastern India, the festive season is typically Durga Puja period, where, hundreds of, the travelers from east of India, they would like to take their vacation or holidays during Durga Puja period, typically which starts from, say, 25th of September and goes up till 10th of October. So this is the biggest season for East India to travel. Similarly, for Western India and Western India particularly, the biggest season for travel is during Diwali, because typically this is the period where the Diwali vacation, the long Diwali vacation of around 10 to 12 days happens in Western India, so people travel during this particular. North Indians would like to, what we have seen is largely north of India, people travel in and around, but during the Diwali Puja and the celebration, they would like to stay at their home. So typically North Indians would like to travel after Diwali. After Diwali, once they finish the Diwali Puja celebration, then they would like to travel. Same applies for south of India as well.
Right. But Aditya, take us to some of the data that you've picked up as well, particularly with tickets and prices being so high. How is that affecting this season?
Anyway, Diwali is seasonally a peak season for travel, right? And over the years, we have always seen that fares do increase during Diwali, because for the simple reason that airlines are confident of filling up their planes, their load factors go up. and in anticipation of that itself, the fares go higher. This year, the one difference is that compared to any other year, already the fares have been quite high, right? Since March, April, May, June, I would say the fares have been much higher than in any previous year in recent times. And that's because the oil price has been high and because of global macroeconomic factors. So what actually we saw was that from August onwards, fares actually started coming down as the oil price was coming down. And now, again, in anticipation of Diwali, fares have gone a little higher. But on balance, given till June, July, they are not bad. It's a good deal. Good deals are available today.
Sorry, Neeraj, you were also saying something with regards to the ticket prices.
Yeah, yes. So I think it is a timing. We, want travelers should plan the trip very smartly, and there are, if they tend to choose the peak timings, the weekends, naturally the demand will be very, very high. But if the plan can be tweaked, if the working days can be chosen, and the flights which are in the daytime or in the night, the red-eye flight, if they can be, if they are chosen, then the flight fares are still in range, and we haven't seen a drastic increase in those fares. So I think it needs a little bit of smart planning and smart tricks. People, we would like to suggest to people and to avail the great deals.
Okay. What are some of the more popular destinations? Aditya, let me come to you on that. Where are people traveling? Are we seeing a surge to small towns? Is that because more people are going back home? What's the trend that we're observing?
So we see Diwali is a season where a lot of personal travel and travel back to friends and family increases as compared to, say, business travel or even destination travel that comes down. So a lot of travel that we see is people going back to their hometowns. A lot of flights in tier 1 and tier 2 towns are going full. From metro to non-metro is a leg that has really picked up during this time period.
Would you agree, Neeraj, that that's perhaps the reason for the price surge on metro to non-metro routes, or is it a capacity issue?
I think so. What we have witnessed is because there is going to be a long holiday season during Diwali vacation, and people want to beat their the work pressure, beating their daily the schedule dues. People are traveling to destinations like Kashmir, people are traveling to Himachal, people are booking their holidays to Goa.
Yeah.
We are seeing a tremendous demand for Andamans. We are seeing a very good demand for Northeast. We are seeing a strong demand for Rajasthan. And we are also seeing strong demands for religious circuits like, Kashi, the Varanasi. There is a product like you want to celebrate, Diwali in Kashi, because that's where you have millions of diyas which are lit. The city, the traditional city, the religious city is completely lit up. And people are also extending their trips to Ayodhya because Ayodhya featured continuously for last 2 years, creating a Guinness Book of World Records for the largest number of diyas being lit during Diwali. So I think overall, not only the personal travel, but coupled with the holiday season and people having the lowest level of risk of infection and almost like a COVID-free environment, we are seeing a tremendous demand not only for personal travel, but also for leisure travel.
All right, so it's a bit of both, according to Neeraj. Great speaking with both of you today. Thank you so much for joining us for an insight into what's happening this festive season. Markets extended their winning run to a second session today. Sensex up 600 points and Nifty nearing 17,900. The pharma pack leading the way: Apollo Hospitals, Cipla, Sun Pharma, Dr. Reddy's and Eicher Motors, some of the top gainers in today's session. On the downside, Nestle, Shree Cement, Grasim, Power Grid and Coal India were the top Nifty losers. The buzz around the Indian tyre industry has been a hot topic in recent days. Tyre stocks have been gaining traction as input costs continue to fall. What's leading to the rally and will it sustain? My colleague Sakshi Batra joins in with more on that.
Well, tire stocks are on a roll. In 2022 so far, the stocks have revved up quite significantly, especially in the last 3 months. If you see, we've seen a stupendous rally in some of these stocks as well. For instance, if you talk about MRF, that's jumped up 27% in the last 3 months. Apollo Tyres has soared over 60%. Ciat has seen a jump of 70% of course, and JK Tyres has jumped over 80% in the last 3 months, sharply outperforming the benchmarks, Sensex and the Nifty. Now, there has also been a clear wealth creation for investors of the tire space in the last 2 to 3 months. So what has really led to this sharp up move? Well, there has been moderation in the raw material prices, which is a key concern, which has been a key concern. The tire industry over the last 1.5 years had been witnessing hyperinflation in the input costs. This was because the raw material prices had also seen an increase of over 50% in the first half of the financial year 2021, and as a result, tire companies' gross margins were getting hurt. However, the prices of, say, pure and artificial rubber have now recently come down from their peak. Brent crude oil prices have also come down and are now at around $90 a barrel. Natural rubber prices are down over 12% from the peak as well, or what they were in the first quarter of the financial year. All of this is now helping these companies' margins to revert to the long-term averages, and that could happen in the near term. Secondly, there's also been a demand surge. Remember, this is due to the rising demand for automobiles, both domestically and internationally, and that's post-COVID-19 pandemic. Now, with the surge in demand for vehicles, the off-highway tires, and the premium segment of the passenger car, Radicals tires are also experiencing high demand, also leading the rally for the tire industry as a whole. Experts now believe that the semiconductor chip shortage is now behind us. The auto sales have now improved, and that may further boost the tire sales going forward. Also, with this steady embrace of EVs in India, tire companies have started launching new products to cater to the rising demand in the electric vehicle space too. Now, tire exports of India have also increased 30% year on year to over 62 billion rupees also, and that's as per the data released by the Union Ministry of Commerce. Remember, the tire companies have believed that for the domestic tire industry, export sales are now likely to further improve as the US and Europe may continue with the high tariffs on imports from China. Now, I spoke with Sanjeev Hota of Share Khan to really understand his outlook on the tire companies going forward from here, the valuations after the recent rally, and his top stock picks from the sector. Listen in.
If you see, it's all started from fall in the crude prices. Okay, so rubber is always a derivative of that. And if you see the composite input cost prices that we track for the tire sector is almost down 20% if you compare to the overall Q1 FY23. And Kottayam rubber price is also down by almost 15%. Thai rubber prices is down double digit. So these are all the reason why the tire sector are doing well. They have taken the price hike. Demand scenario for the auto sector is looking good because of chip shortage is now getting out of window gradually. So all these factors are driving the tire sector. My sense is most of the tire sector is looking well from the valuation perspective. They have not participated much in the overall auto rally that we have seen from last 1 year or so. They have recently started participating, and the valuation, if you see, of JK Tires or Ciat or Apollo are still looks very reasonable. So my sense is from an investment perspective, Apollo Tires is one bet I could take for the next 1 year. So approach should be to buy it as tire stock in a staggered manner. So my sense is Apollo Tires, Ciat or JK Tires, all these stocks looks very well for the investment for next 1 year.
All right, the electric vehicle industry is all set to get a breather with the deadline for new safety measures likely to be extended beyond the 1st of October. As Business Today TV reported yesterday, the EV industry, particularly battery manufacturers, have said that they are not ready to comply with new safety rules by the October deadline. They have cited various reasons for this. To get a clearer picture, my colleague spoke to Sulaja Firoda Motwani, the CEO of Kinetic Green Energy, who also heads the EV committee of the Indian Federation of Green Energy.
What is really the problem? As you're anticipating, you have been outrightly speaking about the norms that are yet to be implemented by the government and, of course, by the EV players. Is it really difficult to implement it in 1 month as the government has proposed?
Yeah, so first of all, very happy to be on your show. Thank you for inviting me. The new norms, which have come in the form of amendment to AIS 156 Revision 2, are basically norms for enhancing the safety of the electric vehicle battery packs. that the MORT has envisaged. And I think at the outset, I must say that the EV industry, completely welcomes higher safety norms for electric vehicle batteries. Because I believe that if the batteries are more safe, they have, better quality and better protection against any kind of mishaps. I think it will make the India's electric EV story that much stronger and pave way for rapid electrification of India's vehicle sector. So certainly the industry welcomes tighter safety norms, and I think it's in the right direction. I think where there's a bit of a disconnect or what needs a little bit more discussion is number one, the timelines, and number two, some of the areas that need clarification. So the changes proposed under the 156 Rev 2 are sweeping changes. They're very wide in nature, which will call for redesign, re-engineering, revalidation, and re-homologation of the battery packs. Furthermore, they'll call for acquisition of significant amount of capital equipment by the battery makers, which would take time for the equipment to be purchased and placed. And then further, the vehicles in which the batteries are going to be placed would also need some amount of redesign because the packs will become larger, they'll become bulkier and heavier. Right. And then the vehicles would have to be retested, and then the vehicle and the battery also would have to be rehomologated. I think all this would require a lot of time and coordination between battery makers, vehicle makers, testing agencies. And then I think if we look at the kind of time required, the kind of changes proposed, I think it would make sense for the industry to have a deeper consultation with MORT and discuss together what would be the right timelines, what are some of the areas that need clarification so that we have a smooth implementation of these proposed norms. So I think some amount of time is required for it to become, something that becomes smooth and productive rather than something that becomes poorly implemented.
How much time do you think the industry or an electric vehicle manufacturer would take on an average? And that point of time really concerns me because by the time the industry would be ready, it will be about 1.5 more year. And eventually we'll have more summers coming up and such incident might rise again. So can the industry do something that can probably expedite at their own end and probably have some measures implemented right now and later on the later measures can be implemented?
So I think that is something that requires consultation between, larger group of stakeholders and the ministry. Few of the people that I have spoken to and from our own experience, I feel that the whole standard can be broken in two phases. Phase one can be implemented by something like March 31st. And the battery maker should then submit their batteries by March 31st to the testing agencies, who should then be given about 3 months time to certify and validate those batteries and the vehicles. And we can be in the market, with those batteries in the next few months accordingly. Some of the standards need some amount of discussion, clarification, and perhaps, they need some kind of tweaking, or they might go into phase two because they're really difficult to implement, like the cell level RFID, or something like 5 levels of charge and discharge cycle for every cell, which would be quite impractical, especially when you're in a mass manufacturing kind of a situation. So these, I think, need some clarification. But I think something like a consultation followed by a timeline setting, which is realistic, and taking everybody's opinion would lead to the right solution, is my opinion.
Honda Motorcycles and Scooters is all set to go big with alternate fuels in India. The second largest two-wheeler company in the country revealed in a conversation with Business Today TV that it is ready to launch bikes running on biofuels by March 2023. Honda is also working with its Japanese engineering teams to ready an e-scooter for India.
We have with us Atsushi Okada. He's the Managing Director, President and CEO of Honda Motorcycle and Scooter India. Thank you for joining us, sir.
Yeah, welcome.
So, sir, how is HMSI gearing up for the festive season in India? Any new launches?
Yeah, frankly speaking, it's an exciting moment. So the all over region from the market, it's a huge demand now. So now our dealer network has enough confidence waiting for the exciting festival season now.
All right, sir. So what do you think commuters are looking for right now, especially after the pandemic? What do you think, what's going on in their minds?
Yeah, last 2 years, very tough season, but after the April, the all over school reopening, also the gradually work from office in the big city. So therefore, they are finding out the solution of movement to select our scooter segment, especially Activa is now sales is coming back. Yeah.
So any alternate fuel plans, any EV plans on the horizon for HMSI?
Yeah, this is Indian government policy, especially for the ethanol blending field. So we are preparing our product lineup to apply with the ethanol fuel in line with the government policy since next springtime in 2023, gradually expanding our engine lineup in applying with new biofuel.
All right, so by when can we expect an EV vehicle from HMSI?
Yeah, so now after the finishing of the feasibility study of the concept of EV from HMSI, now we are starting to shift it to the actual development stage of EV vehicle. So now they collaborate with the Japanese engineering team to try to launch the actual product as much as we can in coming soon.